In 2008, the world was introduced to a revolutionary concept: Bitcoin. A new form of digital currency, Bitcoin promised to change how we think about and use money. Unlike traditional currencies, Bitcoin operates independently of any central bank or government control. It exists solely in the digital realm, secured by cryptography and maintained by a decentralized network of computers. Bitcoin emerged from the shadows of the 2008 global financial crisis, a time of widespread distrust in traditional financial systems. The mysterious Satoshi Nakamoto, the pseudonymous creator of Bitcoin, envisioned a decentralized and transparent financial system, one where power resided not with a select few, but was distributed among many. This revolutionary idea sparked curiosity and skepticism. Some saw Bitcoin as a passing fad, while others recognized its potential to disrupt the established financial order. The journey of Bitcoin, from its humble beginnings to its current status as a global phenomenon, is a testament to the power of innovation and the allure of a decentralized future. As we delve deeper into the world of Bitcoin, we will explore its origins, its evolution, and its potential to reshape the financial landscape as we know it. The story of Bitcoin is still being written, and understanding its past, present, and future is crucial for anyone seeking to navigate the exciting world of digital currencies. The origins of Bitcoin are shrouded in mystery, its creator known only by the pseudonym Satoshi Nakamoto. To this day, the true identity of Nakamoto remains unknown, adding to the intrigue and mystique surrounding Bitcoin. In 2008, a white paper titled Bitcoin, a Peer-to-Peer Electronic Cash System was published under the name Satoshi Nakamoto. This groundbreaking document outlined the technical framework for a decentralized digital currency, one that could operate without the need for intermediaries like banks. Nakamoto's vision was clear: to create a system where individuals could transact directly with each other, free from the constraints and fees imposed by traditional financial institutions. Bitcoin was designed to be secure, transparent, and accessible to all. Despite the anonymity surrounding its creator, Bitcoin quickly gained traction among a small group of early adopters who recognized its revolutionary potential. The decentralized nature of Bitcoin, coupled with its cryptographic security, appealed to those seeking an alternative to the centralized financial system. The mystery of Satoshi Nakamoto continues to captivate the imagination of the Bitcoin community and beyond. Whether an individual or a group of developers, Nakamoto's legacy lives on in the groundbreaking technology and transformative potential of Bitcoin. The early days of Bitcoin were marked by both skepticism and a sense of boundless possibility. People were curious but cautious, unsure of what this new digital currency could become. In its infancy, Bitcoin had little value in the real world, its use cases limited to a small and dedicated community of enthusiasts. These early adopters were visionaries, seeing potential where others saw only risk. One of the most famous stories from Bitcoin's early days involves a programmer named Laszlo Hanyecz, who in 2010 made history by purchasing 2 pizzas for 10,000 Bitcoins. This transaction was a groundbreaking moment, illustrating Bitcoin's potential as a medium of exchange. At the time, this transaction was largely seen as a novelty, a testament to the burgeoning but still niche world of cryptocurrency. It was a bold experiment that captured the imagination of the Bitcoin community. However, this seemingly insignificant purchase would later become legendary, marking a pivotal moment in Bitcoin's journey towards mainstream adoption. It was a small step that hinted at the giant leaps to come. As the value of Bitcoin began to rise, the story of the Bitcoin pizza became a symbol of both the cryptocurrency's humble beginnings and its exponential growth potential. It was a reminder of how far Bitcoin had come and how much further it could go. Despite its early limitations, Bitcoin's underlying technology and its promise of a decentralized financial system continued to attract developers, entrepreneurs, and investors. They saw in Bitcoin a revolutionary tool that could reshape the financial landscape. Word of this new digital currency spread, slowly at first, then rapidly as its value began to climb. The media started to take notice and Bitcoin began to enter the public consciousness. The early adopters who had recognized Bitcoin's potential early on were rewarded for their faith as its value soared, turning some into overnight millionaires and capturing the attention of the world. Their success stories fueled further interest and investment. The Bitcoin pizza transaction, once a niche anecdote, became a powerful reminder of the transformative power of early adoption and the unpredictable nature of this nascent asset class. It stands as a testament to the vision and courage of those who dared to dream big. Section 4. The Volatile Dance of Bitcoin's Price. The price of Bitcoin has been on a roller coaster ride since its inception, characterized by periods of meteoric rises and dramatic crashes. This digital currency has seen some of the most extreme price movements in financial history. This volatility has been a defining feature of the cryptocurrency market, attracting both risk-averse traders and seasoned investors seeking high returns. The allure of potentially massive gains has brought many into the fold, despite the inherent risks. In its early years, Bitcoin's price remained relatively stable, hovering below $1 for an extended period. It was a time when only a few enthusiasts and tech-savvy individuals were aware of its existence. However, as awareness grew and adoption increased, its value began to climb, breaking through the $1,000 mark for the first time in 2013. This milestone marked the beginning of Bitcoin's journey into mainstream consciousness. This surge in price was fueled by a combination of factors, including increased media attention, growing interest from institutional investors, and the emergence of new Bitcoin exchanges. The buzz around Bitcoin was palpable, and everyone wanted a piece of the action. However, this bull run was short-lived, and Bitcoin's price experienced its first major crash in 2014, plummeting by over 80% from its peak. The dramatic fall served as a stark reminder of the market's unpredictability. This crash was attributed to a number of factors, including security concerns, regulatory uncertainty, and the collapse of Mt. Gox, one of the largest Bitcoin exchanges at the time. The Mt. Gox incident highlighted the vulnerabilities in the cryptocurrency ecosystem. Despite this setback, Bitcoin's price rebounded in the following years, reaching new all-time highs in 2017 and 2021. Each peak brought renewed optimism and a fresh wave of investors. These bull markets were driven by a confluence of factors, including increased adoption by merchants, the emergence of new blockchain technologies, and growing mainstream acceptance. Bitcoin was no longer just a fringe asset, it was becoming a household name. However, Bitcoin's price volatility has continued to be a source of both excitement and concern. The wild swings in value can lead to significant gains or devastating losses, often within short periods. The cryptocurrency market is still in its early stages of development, and its price movements can be influenced by a wide range of factors, including news events, regulatory changes, and market sentiment. As the market matures, it will be interesting to see how these dynamics evolve. Section 5. Bitcoin as an investment navigating the risks and rewards. Bitcoin has emerged as a compelling investment opportunity, attracting both seasoned investors and newcomers to the world of finance. Its unique characteristics and the promise of substantial returns have made it a focal point in the investment community. Its decentralized nature, potential for high returns, and role as a hedge against inflation have made it an increasingly popular asset class. Unlike traditional assets, Bitcoin operates on a peer-to-peer network, free from central authority control. One of the key attractions of Bitcoin as an investment is its potential for high returns. Investors are drawn to its historical performance, which has seen dramatic price increases over the years. Its price has appreciated significantly since its inception, and some investors believe it has the potential to continue its upward trajectory in the long term. This belief is fueled by the increasing adoption of Bitcoin in various sectors. Bitcoin's limited supply, capped at 21 million coins, further contributes to its investment appeal, as scarcity tends to drive up value. This fixed supply is a stark contrast to fiat currencies, which can be printed in unlimited quantities. Furthermore, Bitcoin is seen by many as a hedge against inflation. In times of economic uncertainty, investors often turn to assets that can preserve value. Unlike traditional currencies, which can be printed by governments, Bitcoin's supply is fixed. This characteristic makes it an appealing option for those looking to safeguard their wealth. This finite supply, coupled with its decentralized nature, makes it an attractive option for investors looking to protect their wealth from the erosive effects of inflation. The decentralized aspect also means it is less susceptible to government interference. However, investing in Bitcoin is not without its risks. The market is known for its extreme volatility, with prices capable of swinging dramatically in short periods. Its price is highly volatile, and investors can experience significant losses in short periods. This volatility can be attributed to various factors, including market sentiment and regulatory news. The cryptocurrency market is still relatively new and unregulated, which can create opportunities for fraud and manipulation. Investors must be cautious and vigilant. It is essential for potential investors to thoroughly research Bitcoin, understand its underlying technology, and carefully consider their risk tolerance before investing. Knowledge and preparation are key to navigating this complex market. Diversification, investing only what one can afford to lose, and staying informed about market trends are crucial for navigating the exciting but often unpredictable world of Bitcoin investing. By taking these steps, investors can better manage the risks and potentially reap the rewards of this innovative asset class.